Hello everyone, so welcome to my Tuesday forecast and let's get started. So first I'm looking at the euro and the US dollar, and this is, I have to say, the only pair that is looking like there is some potential here. The other ones are really heavily range bound. So let's see what I'm seeing. Right here I was seeing a descending structure. So we were breaking the lows, retracing, forming a descending channel. And what I also like is that there was a clear liquidity area right here, because we got this range, so we know that there are liquidity areas below and above the range. And how did we reach the lower liquidity area? Well, we started to retrace. We formed a descending, meaning that the people's stops were taken out, and that it is a high probability that we will reverse to the upside. So let's see what then happened. Well, we got this candle, and after this candle I was happy to place a pending long order at this level, because this was enough momentum for me. The prior price action was high probability for me to go to the upside. So then what happened? Well, we formed this candle, which left a huge wick. After that, I of course removed my order after seeing that huge wick, because I know that this can just either reverse or it can create a larger range, especially because we had just one candle break to the upside and then a huge wick. I didn't want to enter any trades after seeing this. So what happened next? Well, we continued to the upside, also got a huge wick on the top. So currently we are in this low and this high, and let's see what is happening currently. So we are forming a flag, I would say. Let me see the lows. 372, 372. We have not formed a flag yet, but if we break the low and retrace, it will be a flag. So for me to enter this flag, I really need to see a wider range. I need to see price range, because as I said, I'm seeing this huge wick. Then I need to see that range play out, and then I would consider taking a trade, or maybe I would consider also, if we get a nice slow descending to the entry point, which would be right here. This would be the most recent high and my entry point. So I like the prior price action. It is a little bit volatile and with huge wicks on top and bottom, but I do like that we had this liquidity area right here, and we descended into that liquidity area right here, and we reversed to the upside. So I would look for a long trade, but I need to see this huge wick play out and give us a wider range. If this just gives us a flag, something like this, I'm not taking it. Or if we just get an entry to here, to the most recent high, I'm also not taking that, because it doesn't fit my plan. So this looks okay, but let's see what happens next. So what I can forecast is maybe we continue to the upside, then look for a break and retest trade, or we continue with maybe a large impulse, then look for a flag, or maybe we will start to form an ascending structure, something like this, then get a reversal and look for a short trade. Of course, same thing can happen to the downside. We can get a descending, impulse up, reversal, or we can get a large impulse, then look for a flag to go short, or we can just stay ranging between the low and the high. Why? Well, because we got a huge wick, which usually signals to us a range. What I know that the euro pairs are famous for is ranging for a long time between the low and the high. Definitely a possibility. And also the prior price action is not really clean because of these wicks right here. I'm seeing the wicks, I'm seeing the volatility, so we can expect a larger range also. Now let's take a look at the euro and the Japanese yen. This one is just ranging, so I'm seeing break of the low, retrace, break of the low, retrace, left a huge wick, break of the high, retrace, left a huge wick, break of the high, retrace, left a large wick. So heavily range bound, this pair. And what I'm looking for on the euro and the Japanese yen, I'm looking just for a large impulse to the upside, and then a flag, or a large impulse to the downside, also a flag. Maybe a clean ascending structure, impulse down, and then a flag to go short, or a descending structure, impulse to the upside and a flag to go long. As I said, heavily range bound, not showing me any direction, not showing me any momentum, and I'm currently sitting on my hands, waiting for a large impulse or some clean price action to look for a trade. So let's now switch to the Aussie pairs. This is the Aussie and the US dollar, and look at this. If I squeeze it in a bit, nothing has changed from yesterday. Heavily range bound still. We just broke the high, retraced, left a huge wick. So this is normal for Mondays and Tuesdays because they are predominantly range bound days, and I do expect for the later part of the week to get some moves either up or down, but this is just signaling a larger range. What I do know is that we usually get some nice moves after we get a large sideways range like this. We usually get some large impulses, so we will see if that happens. That would be, of course, awesome because we are trend traders. So I'm looking for a large impulse to the upside, then a flag, or a large impulse to the downside, also a flag. Maybe a nice ascending reversal, look for a short trade, or a nice descending reversal, long trade. And also what I do need to keep in mind are liquidity areas right here and right here. So on the lower time frames we can see that there is a battle between the bulls and the bears. People at the top are selling, they keep their stops in this area. People on the bottom are buying, betting that the price will reach the top of the channel, and they keep their stops in this area. So we can see how the price reacts. It goes into the liquidity area, retraces, into the liquidity area, retraces, right here, pushes into the liquidity area, retraces straight away. So what I need to see, I need to see a large push. I need to see a large push and not a straight retrace. That is a very bad sign. So when I'm in this sort of situations, as I said, I'm looking for a large impulse and then a continuation pattern, a nice clean setup. So yeah, that is it for the Aussie and the US dollar. Let's switch over to the final pair. Let's take a look at the Aussie and the Japanese yen. And this one is even worse. So we were just ranging between the low and the high in this large impulse, as you can see. Then we broke the low, retraced, left a absolutely huge wick, broke the high, retraced, left a huge wick, broke the high, retraced, left a large wick. So also range bound, not showing me momentum, and I'm waiting for a large impulse up or down. This is very, very dirty price action. I really don't like this. So there are liquidity areas above and below. You can see what happens when the price reacts in the liquidity areas right here. The liquidity grabs. People are going long on the bottom of the range. They're going short on the top of the range, playing the range. And same as on the Aussie and the US dollar, I would like to see a nice large push and then a flag. Because I don't want to see just a push and then a retrace. That is very bad. So same thing to the downside. I don't want to see just a break and a retrace. I want to see that conviction and that momentum, something like this. Also what I would take into consideration is if we of course get a ascending into the liquidity area, so something like this, meaning that the people's stops are being taken out and that the market makers are very likely to reverse the price, and that we get an entry short. So same thing to downside. Maybe we get a descending structure, nice clean descending, something like this, reversal, and then look for a flag long. Okay, so to summarize, Euro and US dollar is looking okay. The rest of the three pairs are looking like pure crap and just very, very range bound. So I'm sitting on my hands waiting to see if Euro will give us an opportunity to enter or maybe continue with the trend to the upside. And that is it for the forecast. I will see you tomorrow, and maybe we start to get some nice moves.